I did what I did a decade ago. It paid off really well. But when 2020 came, the entire world changed. And the question is, what's the next thing? Yeah, Bitcoin's the next thing. But Bitcoin is like, it's kind of like Apple or Google in 2010. Everybody needs them. Nobody can stop them.
Cryptocurrency investors expect 2024 to be a pivotal year for cryptocurrency trading, with milestone events such as the listing of cryptocurrency exchange-traded funds, ETFs, and the upcoming drawdown day Bitcoin halving fueling a prolonged bull run. With the SEC's approval of a Bitcoin spot ETF and the upcoming Bitcoin halving event planned for April, we anticipate key changes in supply and demand. Understanding these changes is key to understanding what role digital assets may play in the years to come as they help drive global affordability. On the demand side, the SEC's potential approval of a Bitcoin spot ETF is expected to open the door to a significant number of new investors seeking exposure to the Bitcoin price directly in their traditional investment accounts. The start of 2023 has been strong for cryptocurrencies as the crypto world has shown signs of recovery. Bitcoin even rose by an average of 0.39 in the month of July to reach around $31,000 in 2023. In today's video, we will tell you about Michael Saylor's view on Bitcoin, as he thinks that everyone needs Bitcoin to make it 100x. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Bitcoin is a commodity. It is not a security. So the idea of BlackRock, Fidelity, Grayscale, Bitwise, and ARK all going public with Bitcoin at the same time is a big deal. They are successful as an ETF because Bitcoin is the main ETF. The other ETFs are based on oil, gold, platinum, silver, palladium, commodity baskets, and natural gas. All of these are imperfect as investment assets because physical commodities are not scarce. Physical products can be produced in any quantity with additional capital and knowledge. Ultimately, the best of them is the gold ETF. But if a lot of money is invested in a commodity ETF, that feeds the commodity producers who just throw those commodities into the market and the prices stay low. So commodity ETFs have never been a good idea. On the other hand, if we compare these Bitcoin ETFs to the S&P index, the largest ETF, and perhaps the biggest breakthrough on Wall Street, was the launch of SPY in 1993, about 30 years ago. And the idea of creating an ETF representing a basket of 500 stocks was brilliant. And that was particularly important because it happened at a time when people had lost confidence in money as a savings technology. And so they were trying to understand what money is. And in fact, an entire generation of people has chosen the S&P index as their currency. So the S&P became money and the ETF became the currency index. And this is why today it is the best performing ETF. As for SPY and all S&P index ETFs, they hold the majority of capital. But the problem with these ETFs is that the stocks aren't conservative either. So if you multiply the stock price by 10, you will get more capital. Or if you take hundreds of billions of dollars in cash and buy an ETF like the S&P ETF, the ETF has to buy all 500 stocks pro rata, which means that they will have to buy Tesla, Apple, Google, and Meta, whatever their price, insensitive to price, even if they pay too much. So when they buy it at any price, they create more capital because they encourage these companies to issue more shares. Suppose the stock price doubles. The employees in the company with stock options will sell the shares. They sell the stock option. When they sell the stock option, you put more shares on the market. The price therefore creates the supply. There is a price-supply elasticity there, and it is the same thing that happens with raw materials. This is the same thing that happens with REITs and real estate investment trusts. And the same goes for bond funds. When there are capital flows into all these other asset classes, it creates a supply of that asset. They are not rare. Bitcoin is unique because no amount of capital entering a Bitcoin ETF will create more Bitcoin. What we have is 900 Bitcoins per day. And around April 16th through 18th this year, we will reach 450 Bitcoins per day. It will be the halving, but it will be the largest halving in the history of Bitcoin. That's the equivalent of someone going into the market and saying, I'm going to buy $8.5 billion worth of Bitcoin per year for the next 4 years. This is the impact on demand. 8.5 billion or 23 million per day at current prices. It's a huge amount. But more importantly, this is a huge shift in supply and demand during the year in which demand through ETFs increased by 4 to 10 times daily supply. So what you have is institutional capital comes in and then the supply is cut in half. The approval of ETFs was a fairly concrete endorsement of Bitcoin as an asset class by regulators. The launch of ETFs was therefore a great success. This is the ideal type of asset to include in an ETF. It is a global asset. It's the biggest brand. Everyone knows what it is. It is the best thermodynamically sound investment. It has the best historical performance. And of course, it doesn't have the full range of risk factors that a company or bond has. It has no credit risk, no business execution risk, and no currency devaluation risk. And it does not present the physical risks of real estate. You have no property tax risk. You have no political risk. The biggest risk factor for Bitcoin reaching 2024 was a government banning it. But what just happened in January is quite the opposite. The main thing about the FUD around Bitcoin is that it's too good to be true. And because it's too good to be true, the government will hate that. You bought it and will take it away. And with the approval of these ETFs, it is the government and the most powerful country in the world, the United States, which has become a leader in financial regulation. So whatever the US does, it will influence Singapore, Australia, New Zealand, the whole of the EU, even Hong Kong, even China, and all of South America and all African regulators. So everyone is watching what is happening in the United States. It was a very powerful signal. What happened 10 years ago was the digital transformation of all these things. It is the digital transformation of information that has created billions and billions of dollars of wealth. And you could have made a lot of money if you had ridden that wave. The S&P is up 40 to 45%. If you choose the top 5 companies in the index, you will double that return. If you choose the rest had no return. So there are 493 or 490 companies that don't return anything. They are all losers. There are between 5 and 10 winning companies, and so you pick the winners. You do better than the index. Bitcoin is the next big thing, but Bitcoin is something like Apple or Google in 2010 misunderstood. Everyone needs them. No one can stop them. But it's a little better because Bitcoin is an asset class. Therefore, its target use case is a store of value for civilization, which means there's no reason why it shouldn't include gold. And gold is worth 10 trillion as a store of value. Why can't you subsume real estate under 100 trillion? Why can't it cover all valuable properties, which amount to 2, 3, 4 billion? And the more valuable it becomes, the more useful it becomes. The big fundamental idea. And it's very difficult to explain to people, but if the value of Bitcoin increases by a factor of 100, because people are buying it as a store of value, its value is 100 times higher. Whereas if Apple stock price is 100 times higher, cash flow over the next 20 years will have to keep pace. People who criticize Bitcoin say it has no cash flow. It's not the flaw, it's the functionality. It's not a responsibility. The fact that it is an item that is not valued on a cash flow basis means that it will never miss your quarterly cash flow expectations. This is a reflection of the cash flow that has reached it. Bitcoin is simply a much more powerful idea. This is a digital transformation of capital. It's not digital information, it's digital energy. Energy is matter. Energy is capital, energy is property, therefore Bitcoin is digital energy. That's all for today. Let us know your views in the comments section below, and don't forget to like this video before leaving. Thanks for watching.